Hi guys, this is GDP USD. I'll be analyzing GDP USD from the monthly time frame. As you all know, I mark out my key levels. My levels are the areas where market has rejected significantly from. This is a key level. Why is this a key level? Because the market rejected significantly from here, came back, tested it again, rejected like this. Impulsive move, corrective move, impulsive move, corrective move, impulsive move, and we're supposed to have a correction, which is already happening as of the moment. So what am I going to be looking at in GDP I'll mark out my key levels. My key levels are these areas that I've already marked out already. But if you look closely inside, you're going to see there is another key level around this region, so which I'm going to mark out presently. If you check, remember the key levels, if you're marking out the key levels, is candle close. You have to mark out the candle close. There's a minor key level around this region. I'll just mark it out. Minor key level around this area. If I'm marking out my key level, I make sure that it touch as many candle close as possible. Look, there's a touch here, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch. That's how I mark out my key zone. And if you see in this area, this market has also touched it here for the 7th time. So after I've marked out my key areas, what I'm going to do next is I'm going to mark out what happened here, the chart pattern that happened here. Although this is not the best inverse head and shoulder pattern, like I told you last week, I'm going to mark out the neckline of this inverse head and shoulder pattern. If you see, this is a neckline. So I'm going to mark out closely the neckline of this inverse head and shoulder pattern that is here. So, and you know, from the law of price action, there is a law of price action that states that if, because an inverse head and shoulder pattern or a head and shoulder pattern is a consolidation. So if it breaks out, it's going to break out the same length, just like this. It's going to break out the same length that it has formulated around this area. So we're going to use the left shoulder, for example, in this case. So you're going to bring out this line and put it here. So you're going to see the area at which it consolidated around this area is the same length it's going to produce, which it has already done as of the moment. So what am I going to do in this place? I'm going to just wait, because on the weekly time frame, there's already a retest of the neckline. I'll go back to my weekly time frame. There is already a retest of the neckline, which I can see right now. Look. Look at the retest. Look, in the bigger head and shoulder, the one that looks like a big head and shoulder pattern. Look, the head, the left shoulder, and potential. This is supposed to be the right shoulder that's supposed to push the market downwards. But it did not. And it automatically created another head and shoulder pattern here, like inverse head, and this is a head and shoulder pattern. This is an inverse head and shoulder pattern. This is the head, this is the left shoulder, and this is the right shoulder at this area. So, and if you see, this is a push and this is a retest of the neckline. Although I was kind of looking at this inverse head and shoulder pattern, like this neckline, retest of the neckline, as impulsive, because if this is a retest of the neckline, it's not supposed to break this neckline here. It's supposed to stand at this zone, but it broke it. Sometimes this now will not be a market manipulation, most likely. So if we come on the monthly time frame, you're going to see that, let's check on the monthly time frame. You're going to see that this is a weak rejection. This is actually the if you see watch closely, this is actually the close of the candle on the zone. But you see this one that happened here is a weak rejection. This is a weak rejection. So this on the monthly time frame is a fake out. So that is why on the weekly time frame it looks like a candle. If you don't know, you're not going to realize it fast. On the weekly time frame, it looks like a candle. So when I entered this trade, as I have explained to you last week or 2 weeks ago, was this weekly bullish engulfing candlestick pattern. This weekly bullish engulfing candlestick pattern, this was where I entered the trade for last week or last 2 weeks. I ride the trade up until this level, but right now we have hit uh, a semi-major zone. This area is a semi-major zone, and we have a weekly bearish candle. So what is going to be on my mind is two things. It's either we are going to pull back downwards like this at this area. Definitely we are going to pull back. You know why I said we're going to pull back? Not like, you know why I'm anticipating that we're going to pull back? Because of this area where the market has rejected significantly. This zone is a very strong zone. It's a very strong zone. You know why I say it's a very strong zone? Because the market came here, rejected significantly, came here. If you see the pattern that the market created here, it rejected significantly, came here, rejected significantly, came here, rejected significantly. So this is actually, I will assume this level to be a major zone. After the market broke it, it still came back and rejected, came back here, rejected. After it broke it, came back and still tested. So this is a very important level to reckon with. So the market have showed you that this level is a very significant level in the market. So what I'm going to be expecting, this candle has already printed red on the weekly time frame. So it's either I'm expecting a pullback to this region for the continuation of the trend. See, high, lower high, higher high, lower high, higher high. Technically, if this market wants to continue pulling upwards, it's supposed to give me a lower high to continue to push upwards. Look, the nature of the weekly correction. That is what I'm looking at most likely. I like to look at the weekly correction. You know, there is a weekly correction and there is a daily correction. So on my part, I like to look at the weekly correction. The weekly correction is very important. These weekly corrections are the candles that I really like to trade. So since I've already established the fact that we want to trade the pullback, this right now is a bullish market, but we want to take advantage of this pullback. This pullback, I will come back to my daily time frame. I'll look at what is happening on the daily time frame. Since the weekly time frame has already given me a direction, then I will come to my daily time frame. I'll look at what is happening on the daily time frame. Right now, the daily time frame is a little bit retracing a little bit. So what I'm going to do is this. I'm going to check the nature of the previous correction. If you see this candle, it pulled back and it corrected. This on the weekly time frame is a pullback. Remember what we saw, the nature of the pullback on the weekly time frame. This is what we saw. This is a pullback. And this is also a pullback. This is kind of a supply zone. It's looking like a supply zone on the weekly time frame. And this is also a pullback. So you see the pullback are kind of deep. The pullback are kinds of deep. So I want to take advantage of this pullback that is potentially I'm looking for that is going to be a little bit deep. So I'm going to be careful. This is what I'm looking at here in the daily time frame. This is what I'm looking at here on the daily time frame. So I'm either expecting this pullback, or I'm expecting this pullback, or I'm expecting this pullback. You see, I'm going to take note of this pullback. Why? Because this candle, this price can easily push back to this place just to form a double top or head and shoulder pattern just like this around this area and drop. Or I will just expect a straight pullback just like this, just drop. So that being said, I'm going to be looking for the area where I can potentially get a pullback from, which is this area, the daily demand. I will put my line, my rail, horizontal rail around this region. I'll check where I can potentially take the trade. If the market breaks this area, I will know that this is a pullback, but maybe it wants to give a double top or head and shoulder pattern before it continue going down. It's still a sell. It's still a sell. The only time that I'm going to consider this market a buy market is only when I see a clear break above this area, then retest this area for continuation down upwards. But as long as this market stay below this area, either they push back, pull like this, just like this, to come here and form a little bit of a chart pattern or a double top or a head and shoulder pattern, just like this, I'm still going to be looking for sell to this market, at least to this area as my first level target. To structure, this is the structure. This area is going to be my first level target, and this area is going to be my potential overall target in case the market want to continue bleeding downwards. So I will, since I've already established the fact, the nature of the pullback that I'm going to be looking for on my daily time frame, then I will come back down to my 4-hour time frame. When I come back down to my 4-hour time frame, you can see that the line, the horizontal line that I've drawn here is also matching, somehow matching with the neckline at this area. Although this market has tested this neckline already in this area, what I'm going to do is this. Just to be sure where the market is going to reverse from, because I've seen areas and scenarios whereby, it's kind of difficult to enter the market. Is it going to pull back from this area? Is it going to pull back from this area? This is what I do. I put my horizontal rail like this. I put it at the wick of the candle. I don't put it so close. Put it at the wick of the candle. Then I'm potentially going to be looking for something like this, a retest. If I see a retest of this trend line that is here, I don't want to see a break of this line. I will just draw my 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 rail a little bit closer. Just for a moment, okay? I'll put it here at this area because this is also a retest of structure at this area. You see, this is an inverse head and shoulder pattern. And once this one break, there is a retest of the neckline, which is this consolidation around this area. And if you check, this consolidation push a little bit above. So don't be carried away if you're going to see like a push up below. The major thing is that you're going to see a rejection backward. So in this case, what I'm going to do in this case is this. What I don't want to see or what I don't want to trade really is a break and a close above. I don't want to trade a break and a close above this area. So what I'm going to do is this, just to be safe, I will put out my trend line like this. Once I see a close above this area like this, then I will be expecting this market to push up a little bit to this area. But once I see a break of the neckline, let's come back down to the 4-hour time frame, to the 1-hour time frame. Once I see a 1-hour break, either a 1-hour break or a 4-hour break, you're good to sell. It kind of varies. It can be a 1-hour break for me, or it can be a 4-hour break for me. So this this consolidation is kind of looking similar as this consolidation. Wait a little bit. If you watch this consolidation is kind of similar to this consolidation. And this consolidation is kind of similar to this consolidation. So this pattern here is giving me a correction pattern to continue downwards. Remember, our weekly time frame is telling us it's bearish presently as of the moment. Daily time frame is also, daily time frame is indecision as of the moment, and 4-hour time frame and 1-hour time frame is giving us a corrective pattern to the upside. So this candle, what I normally do, I check the numbers of hours. We're on 1-hour time frame, so I check the numbers of hours that the candle has formed. 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13. 13, that's 13 hours. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 16. So what I'm going to be expecting here is around 16 candles. So what I will just count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. This is already good enough for a sell. So 1 hour, ideally, I would like it to get to this white line. It's really going to be nice if it gets to this white line. 1-hour candle close will be nice. 1-hour break of structure around this area will be nice. Once I see a 1-hour break of structure just like this, 1-hour candle just like this, I will sell this market. At least my first level target for this market is going to be at the 100% retracement. Once it gets to this 100% retracement, I'm going to take out 20% of my position or 30% of my position. I'm going to move my stop loss to break even. I'll take out 20 to 30% of my position and move my stop loss to break even, because this market can easily come to the 100% retracement and reverse. So I will be very careful. I will close out some certain percent of my position and leave the rest. But however, if the market break the 100% retracement, I'll be adding more position. I'll be looking for a break like this, a pullback like this, then a correction downwards. I'll be adding more position after the break of the 100% retracement. But for now, what I don't want to trade is a push above. Once it push above this area, I know that the market is about to maybe give a double top on the higher time frame before it pull back down, a double top on the higher time frame before it continue to go down. However, my bias for now, as of the moment, we are bearish in GDP USP. That is my analysis for today.